if you want to 10x your money, you just buy Bitcoin and wait. If you want 100x your money, you buy Bitcoin with somebody else's money, right? And if you want 1,000x your money, you buy Bitcoin with someone else's money and then you lever that. You know, if you trace the arc of human history, right, we use lots of things for money. We use seashells, we use glass beads, we use copper tokens, we use gold coins, we use all sorts of credit networks. If you think about capital, that is long-term economic energy, wealth. In the 20th century, capital was either equity capital markets, so private equity and especially public equity. And the money, the long-term money in equity capital markets is the Vanguard 500, which became the S&P 500, became the S&P, the equity index. And then you have real estate capital, New York City, London, the Gulf Coast, Florida, right, the West Coast. Scarce, desirable real estate, and you know, that drove the mortgage industry and it drove the commercial real estate industry. And then you have fiat capital, sovereign debt, and credit, and then you have corporate debt as capital. Do I own corporate shares? And if you're wealthy in the 20th century, you owned a sports team, a trophy asset, equity, private equity, public equity, maybe some bonds, a lot of real estate, most likely, and a little bit of art. So that was the capital markets in the 20th century. Now we have digital capital. Satoshi's breakthrough, the singularity of Satoshi was the idea that perhaps by knowing a secret, if the secret was a private key that gave you access to a monetary network or a piece of the monetary network, then you could hold wealth in your head. So for the first time in human history, we could tightly bind economic energy to the individual or the corporation through something that they knew. And that solved a problem that the pharaohs couldn't solve. How do you take your money with you? It's a problem that you would like to have solved if you were a Protestant in Catholic Germany or a Catholic in Protestant North Europe, or if you were Jewish anywhere ever in the history of the world, or if you were a Muslim when the Catholics took over, or if you were a pilgrim or a Puritan, or if you look at the entire history of the United States, it was always some group of people fleeing some other group of people pursuing property rights. And the one commonality in human history is there's 100,000 incidences of one group fleeing another group, and it's very difficult to take your money with you. Very, very difficult. You can't take the building with you. You can't take your stock portfolio with you. If you get out of favor, let's take Roman Abramovich, got very out of favor. The West took his sports team, took his buildings in London, took his villa in the south of France, seized his yachts, impounded his equity portfolio, impounded his bond portfolio, took all of his credit instruments, and the only thing you have left is your Bitcoin, right? Which is interesting. So what is Bitcoin? It's basically economic energy that you can carry with you to the grave, that you can control, that no one can take from you. And so the inflection point is the point where you could own something without the permission of someone more powerful than you. And that's an inversion. And it's an inversion of property rights. It's a singularity. It's a revolution. It's a paradigm shift. And of course, it starts as this ideological paradigm shift. Am I libertarian, or am I an Austrian economist, or do I believe in freedom and the like? But what follows is the spontaneous formation of a global network, and that network right now has 750 million people that believe in it. The crypto industry has 400 million people that believe or hold some form of Bitcoin. It is a global viral protocol which is manifesting property rights and economic empowerment. So the digital transformation of money wouldn't be possible without the creation of digital property or digital energy. That is something conservative in cyberspace, that if I send you $1 billion of Bitcoin by transferring a cryptographic approval to you, I lose it, you have it. If I send 1 billion videos or 1 billion songs, I have it and you have it. Information is non-conservative, energy is conservative. The conservation of energy is necessary to create anything of substance, of matter. And so Satoshi marks the singularity where energy flows into cyberspace and then digital networks come to life. And what's the killer use of energy? In this case, the killer use of energy is something that matters, the creation of matter and the creation of capital. So we formed a digital capital network, if you want a simple semantic representation, call it digital gold if you like, but digital gold understates it so much. It really was the spontaneous creation of a network to move capital and the capital asset. Call it a bank in cyberspace, if you will, and a bank in cyberspace where you could put your money and store it forever. But the breakthrough is, how do I move capital through time and space? And it's one thing to take, what's the value of every building in Naples, Florida? It's one thing to move the value of every building from here to Tokyo in 10 minutes. That's interesting, moving money through space. But it's an altogether different thing to how do I move the money in time 100 years forward. So the transformation of economic energy through time and space, that is the big idea. And of course, it only works to the extent that people buy into the protocol. Like if I had English language and it had a word for everything, but only you and me spoke it and nobody else spoke it, the protocol's not so valuable. If that table uses Arabic numerals, but everybody else uses Roman numerals, right? It's a protocol that's 100 times better, but no one uses it. So Bitcoin is this viral protocol. It's spreading, and how important was it in 2009? Not very. How important was it when I got involved 5 years ago? It was like a $150 billion network. How important is it today? It's a $2.5 trillion network. How important will it be in time? Well, when it's 25 trillion or 250 trillion, all of a sudden it starts to be very meaningful. So I think we're very fortunate. We're living in a time where we have created digital capital. And now, what do you call it? Well, some people think of it as digital money. It's not money like a medium of exchange. It's money like a store of value. It's long-term capital. Some people call it digital capital. It's a long-term store of value. But the network itself is a digital network. You can move it around. And what's most interesting to me, I think, is in the last 12 months, we're like, what's the date? November 6th?
November 6th.
1 year anniversary from the red sweep. So 1 year ago, there was a red sweep, and one of the things that got settled was, is Bitcoin a digital commodity? Yes. Is it digital gold? Yes. Is it digital capital? Yes. Will the banking system of the entire world embrace it? Yes. All of those things were settled a year ago today with the red sweep. You now have the Secretary of Treasury, Scott Bessent, last Friday, tweeted Bitcoin's been running uninterrupted for 17 years. Right? That's the Secretary of Treasury. 4 years ago, people said, basically we went through this evolution. Bitcoin is tulip bulbs, it's a scam, it's a criminal enterprise. That was the hyper haters. And then we got to well, I admit it's better than gold, it's better than everything else, but it's too good to be true, so the government's going to take it away from you. Right? We lived through that stage from 2020 to 2024. It's like, well, I get it, but the government's going to take it away from you because it threatens the establishment. It threatens the dollar, it threatens the banks, it threatens the United States. And that got settled a year ago, and what's happened in the last 12 months is the President of the United States said, we're going to be the Bitcoin superpower, we're going to be the crypto capital of the world. Secretary of Treasury says, we're not taking away from you. In fact, it's good for the dollar, it's good for the United States, it's good for the world. Not only are we not taking it away, we want to be the leaders and we want to own it. So I think this is a very exciting year because at this point, you can see the market spoken. You've got $2.5 trillion of economic energy in this thing. You can see that the political sentiment has shifted, the Overton window has shifted, and now we're not at the end of Satoshi's experiment. We're in the first year of institutional adoption of digital capital and everything that flows from digital capital.
So we've talked a lot about portability, store of value, ability to actually transfer wealth. What would you say is the opportunity for wealth creation associated with this?
Yeah, that's very exciting. I think, so first of all, we'll just take some simple numbers, right? Like Bitcoin's been going up 50% a year for the past 5 years, 80% a year for the past 8 years. I anticipate it will appreciate about 30% a year for the next 20 years. So you want a simple number in your head. In US dollar terms, 30% ARR for the next 20 years. When you get to the out 20 years, probably you're 20% a year. So the terminal velocity of this thing is 20% ARR, 20 vol type asset. Think in that terms. Now, once you think about that, you put yourself in the position of, I'm an individual, I'm a corporation, I'm a government, how do I cash in on this? Well, I joke about it, but it's a simple mnemonic. If you want to 10x your money, you just buy Bitcoin and wait. If you want to 100x your money, you buy Bitcoin with somebody else's money, right? And if you want 1,000x your money, you buy Bitcoin with someone else's money, and then you lever that, right? And so what does that mean now? Well, you can simply just take your long-term portfolio, which is probably divided between equity and some bonds and some real estate, and you can start to allocate some to digital capital, and the portion you allocate will grow 30% a year, and what is real estate's 5, 6, 7% a year. The S&P is like 14% a year. Gold's about 14% a year. Money market funds are giving you 2% after tax, or about 2%, less in Europe. A little bit more in the US, but on a tax basis. So you're not getting rich by holding money market funds, for sure. So you could just allocate some or all to digital capital. But if you knew that something was going to go up 30% a year, then that means that any money you can borrow at less than 30% a year is going to be accretive, right? So you could just, you can just go ahead and take a mortgage on your house, draw the money out of your home equity, buy Bitcoin. You're paying 5% or 6%, or When I first suggested that, people thought I was crazy, and the mortgage rate was 2.75%. So, right, if the government wants to give you a subsidized mortgage, then you just draw down debt against a long duration real estate asset, and you invest it at 30%. You scrape the difference, and that's kind of not that complicated.